Hey everybody, it's Mike from Orderflows, and welcome to today's video. Today is Wednesday, January 18th, 2023, and it's a very fascinating day in the market, starting from Tuesday night into today, Wednesday. And we had Bank of Japan, we had some numbers here in the U.S., and Bank of Japan kept the monetary policy the same. Stocks, went back up. If you remember yesterday. Okay, we trade all the way up here to was that 35 and a quarter. Then overnight we sort of came off a little bit. We broke 4,000, then rallied back up above 40.20, sort of that key level I talked about yesterday. Got all the way up to 29 and a half. Then sort of went sideways the rest of the session. The U.S. numbers came out and spiked up, pulled back, but then we continued higher and sort of made another run up towards yesterday's high. Then what happened? Market, boom, 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 boom. Sold off all the way down into the 40s, from 40.30 area, broke 40.20, all the way down to, 39.50 into the 39.40s. So, again, I don't want to get into the whole, macro views. I'm not an economist. I don't pretend to put myself out as an economist, but, it is important to understand when you have numbers, or, like last night, you had the Bank of Japan come out, in my trading room, or, in my weekly training sessions for users of my software. Daniel pointed out that, hey, what, guys, don't forget, Bank of Japan is later tonight. And, it was an hour later, and you saw what happened in the yen futures, right? Yen futures got spanked. This is the footprint chart. And, we were trading around, what was that, 78.40, 78.45, and then we just, what was interesting is, when it sold off, there was quite a bit of volume on both sides of the market once it sort of got down, obviously into the new lows. So it wasn't like, what we see generally in the U.S. markets, where it just gets swept through and there's very little counter trade. I mean, initially there was, but then you could see, trading both sides of the market, as opposed to just all zeros on the offer side. So there were buyers on the way down. I mean, aggressive buyers. Now, partly, when people have stops in the market, just sort of talking a bit about, stop runs, because, I know people like, oh, there's a stop run here, etc. And to be honest, if you see a stop run in the market, by the time you react to it, it's too late. You can't really react because the market will move too fast. But, a lot of times, like the big institutional desks, if they have an order, it's a stop order in, either the yen or the E-minis. They don't just put it in there with no limit. They will put it in with a limit. So oftentimes you're going to see, people have put in a big stop order. Now, I'm not saying this happened, but this would explain why you see sometimes, big offers coming in. But in this case, what we're seeing is, if there's a stop, say someone's got 100 contracts to sell, they put that's, we'll call it 78.20. They'll put it down to, say, 78.10 with a limit of 78.10. So, a stop with a limit, and, it'll just sort of work its way down. So you did have some good, decent two-way activity here, right? Obviously, the big long bar market is looking for liquidity. Now, what was interesting about this big bar down, just really quick from just sort of a price action standpoint, is it continued lower in the next bar. Oftentimes you see that big spike down like this, and then it just sort of goes inside in the next bar and the next bar. The fact that it took out the low in the next bar, to me, was, kind of bearish, in the sense that, yeah, we're continuing lower immediately, as opposed to just sort of catching our breath and then going sideways. So it did, eventually make new lows down to this number here, 77 even, the figure. But what was interesting, at such a nice round number, didn't really trade very much. You can see just 14 contracts traded there. Eventually it took it out, and you're not seeing a lot of size, defending that area. So it was just one of those things where, you tend to expect to see bigger volumes than, you're seeing what here, 14 here, 47. So about, 60 contracts, plus we taken trading on the offer, 70 contracts. There just wasn't that big support in the market for it to really bounce up off of, okay? Even though, it did test it again here. You have a divergence. It did take it out. finally started to see some support coming in here much later, but we're continuing lower. But really the sign, and this is not an order flow related thing. For me, it's more, I'll say price action, but it's just when I see that big bar sort of take out the lows, right, that initially, and then the next bar goes even lower, it's just telling me there's still more selling pressure. Now, I said usually you're going to see the market spike down like that and then it go inside for a series of bars. But the fact that it just sort of came right back and made new lows was a bit bearish on the market. All right, so let's sort of get back to the E-minis here. I sort of diverged there for a second, but again, E-minis spiked up right here when the Bank of Japan, right, it was very bullish for the market, keeping that monetary policy the same. You could see, let's just go back to that time that was last night, 21 o'clock. Where are we here? Okay. So you can see it's sort of the opposite, right? You see the big move up, then you're going inside, and then eventually start making those new highs. But usually, you get that big reaction move, and then you go inside, just like today. Okay, if you remember, what time was that initial move? There's a couple of nice moves here, right? You got the big move up, inside, and once you start going inside, then you're sort of watching, okay, what happens when we sort of break out of, that initial bar, right? So whereas the yen, we did it basically on the next bar. In the E-minis, went inside, then broke out to the upside, and later it didn't make that high and broke to the downside. So what was interesting, I mean, there's, again, if you remember yesterday, what was yesterday, Tuesday, in the S&Ps, right, there was that big size going through at 40.20 here, right over here, the 4,000 contracts. And, it's just an area of interest, right? So again, when we came into the cash session today, okay, we were trading sort of above that area. Cash opened up, sort of came down to it. And it's kind of uneventful. I don't want to say, look at that, it was rotating around there. Yeah, it was also rotating around a lot of different levels. But you're not seeing any big size really come in here. I mean, there was, the 1700 that came in here 15 minutes after the cash open. I don't know. I don't really read too much into that at this point. They had all that time earlier to work it. I mean, they could have sold it up higher at 27 if they really wanted to. But the market, it got up to, the 28s. It didn't hit yesterday's high. Yesterday's high was 35, right? 35 and a quarter, so just above today's high. We did eventually go up to new highs here at 909. Now, right off the high, the next bar, big negative delta, big, strong, aggressive selling, right? You're seeing 1, 2, 3, 4 imbalances coming into the market. So you couple that with the strong negative delta, the delta volume also strong. You're sort of leaning to the downside. Now, at this point, it's 9:10. Everything that's come out up until this point has been bullish for stocks, starting with the Bank of Japan, right? Trying to get short, I'm not saying, this is the perfect sign to get short, because everything that you're seeing in the market today, news-wise, even flow-wise, up until this bar has been bullish. And I'm not convinced that, even though I got this selling coming in, the aggressive selling, with the imbalances, with the delta volume, that, hey, this move is over. Oh, you could stick a fork in it and we're going to drop, another 70 points. So you just got to watch, because even if we did drop, you're still sort of the back of your eyes and the back of your mind, you still have that 40-20 level to think about. And eventually, we started going sideways. Then we broke down to 40-20. And again, we just sort of rotate around there, bounce, we get through it. Then we sort of come back up. Now we're starting to see some stack selling imbalances come in here. And then now we're clearly below 40-20. whoever that seller is at 40.20 is looking like a genius. But we're running into some size down here. Here's 1500. Okay, here's 1100. Okay, so there is some support in the market, but the market isn't getting through that. So you're seeing some price levels with decent volume, and by decent volume I mean over 1,000 contracts, right? 1500, 1100. Okay, so there is support and it's getting through it. Not only did it get through it here, but it got through it pretty quick, right? 1500, and then you got an imbalance below it, another imbalance below it. Okay, it did come back, sort of test that area, just like here. It sort of came back, testing that area. Now, what was interesting here, right? You got the 1500, you got the 1100, even on the offer 1100, starts trading back up a little bit, right? So it gets back past the stack selling imbalance, and then you see a big offer coming in here, 1149. Okay, so we're right around unchanged, or where we opened last night at 40.08 and a half. Let's start putting it together. There's some bids here got taken out, bid here that got taken out, seller here. Then we're sort of drifting back up, or right around unchanged, and a big seller comes in, right? Supply is coming into the market here, 1149. So let's start putting these pieces together, okay? Big bids are getting hit, market's trading below it, market's going lower. Now a big offer, supply is coming into the market. What do you think is going to happen? Now, again, you could look at these deltas, and these things are, I don't want to say off the Richter scale, but they're quite strong here. Minus 1330, minus 2500, minus 1300. It's consistent, all right? It's not like, and when you do get a positive delta, okay, 474, 390, 400, that's it. But you're seeing minus 770, minus 1300, minus 2500, minus 500, minus 1300, minus 1800. There's quite a bit of selling taking place below this 40.20 area just in this recent history. I'm not going to even worry about what was happening above 40.20, because really what I'm looking at right now is just this part, this information. So strong selling. Now I'm seeing offers come in here. All right, so what do you think? Do you think the market can potentially rally back up to the highs, or do you think it's probably going to start selling? The way you got to view it is it's probably going to start to sell off, and then it does. All right. I mean, the evidence is clearly there in the deltas, in the imbalances, right, and even in the volumes, right? It's just telling you that it's all slanted to the selling side, and then we start dropping. Down, down, down. Remember, our low is just right here at 96 and a quarter, right? Which we sort of did pretty much right after the open. So to get from 08 down to 6 and a quarter, that's not necessarily a big move. It's like 12 points, right? So, and E-minis, right? We could do that. Sometimes we do that in one bar. So it's not a big move into the lows. Okay, so we hit the low, get within rather a tick of the low, 96 and a half, bounce up a little bit. Okay, now as we bounce up, there is some buying coming in, because we're off our lows, 1500, 400, 173. That's not a good sign in terms of if you're looking for this market to keep going up, right? You want to see 1500, 1400, 1100, ideally, something strong, but not like the aggressive buying is a third of what it was the first time, and then again another third of what it was earlier. This bar here gives a little bit of encouragement, plus 200, so it's sort of righting the ship. But then the selling comes back in, minus 496, right? Then some small deltas, minus 36 and plus 17. I treat those, when I see small deltas like that, 36 or 17, I just treat it as neutral, because in the S&Ps, 50 contracts is nothing, where it could easily flip from negative to positive or positive to negative. Then the red bar with the positive delta, so it's telling me some supply is coming into the market, and then another bar with some strong negative delta, minus 749, is closing near our min delta of 757. You got to be bearish at this point. Forget about this market, all that bullish information. this market is going to turn around now and start rallying, right? I mean, the thing about today's market is like, if anything, you understand that, I don't know how to say it without sounding confusing. The markets don't always make sense, so don't try to make sense of the nonsense. Meaning, you had all that bullish information, yet the market is not rallying, it's selling off. What do you think is going to happen? Now, actually, you should start getting into the thought of maybe we're in a flow-driven market, right? Because our high was at, whatever it was, 32. And then you're just seeing repeated selling, right, in the deltas. You can see that the imbalances. Then we're coming into the lows, right? 96 and a quarter. Boom, it just takes it out very easily, right? You can see you got 1, 2, 3, 4, 5 imbalances going into the low. Take it out, okay? Trading down here at 90, just make new lows like every couple of minutes. Then this is where it gets interesting. So here you have a green candle with positive delta, right? That's a divergence, right? Because price is trading up, but delta is still negative. Okay, but that's not by itself a reason to get long. The next bar, new low, more selling coming in. But again, really the sign to be getting short was up here below, this 08.5 area. I mean, you just see a lot of bearish information coming in. To me, this volume here was sort of like the kiss of death for this market, this 1149, and just telling me, what, this market's going further down. And then so we make these new lows, right? New low here with that divergence. Then you got divergence and divergence, okay? Now, again, you don't have a bullish ratio, okay? That's these black numbers here, right? If it was a bullish ratio, it'd be a green number under the bar, which would tell me that there's bullish order flow in that bar. So it's not just a normal order flow. That's why it's colored black. Now, you do have, some positive deltas in here, and it's closing, near our max delta, which is encouraging. 778, 286 versus 296, 778 against 808. I don't like that it's sort of reversed. I'd prefer that the 286 came before the 778, but obviously it didn't. And then this next bar, it starts trading up. 745 positive delta. Hey, that's great. You got 700 positive delta, 745, and in between is close to 300. Maybe we can start building off this, and we could bounce back up above 4,000 and make another run at the highs. Well, divergence, failed, divergence, divergence. I've talked about this a bunch of times in the last several weeks, and understanding the type of market that you're in, right? And a flow-driven market is the best way to describe a flow-driven market, either to the upside or to the downside, is a market that's driven by other time frame traders. The longer-term traders, the traders that have a more deeper pockets than you and me, and that can hold through, positions. They're going to hold positions for a lot longer, okay? And they're the ones that move the markets because they've got the money behind them. And they got the conviction, right? We're just day traders. All we want to do is jump on the back of what they're doing. And a clear sign of a flow-driven market is a series of failed divergences in a short period of time. In this case, it's 10:19 to 10:26, so about 7 minutes. So all you got to do is you just got to sit here with a sell stop right below this 80 3/4 area, right? That's all you got to do. Because if we take out this low, then it was basically confirm we're in a flow-driven market. And when we're in a flow-driven market, take out whatever other indicators you're using. You can just throw them out the window and just go along for the ride, okay? So what happens? We start rallying up a little bit, getting weaker, 12 in the delta, minus 284, minus 34, then bam, we break right through this 80 3/4 area, right? There was some liquidity there at 80.5. You see the 1250, the 705, the 800. So, you're talking close to 3,000 contracts from 80 3/4 down to 80 even. So even if you're working a stop here at 80 3/4, maybe you're filled at 80.5. Maybe worse would be 80 1/4. And then just sort of goes sideways on you. And then another new low. How much heat would you have taken? Say you got filled. You have stop is right below at 80 3/4. Say you're getting filled down here, 80 1/4. It only rallies back up to 81 and a quarter, so 1 point. And this is, you're short at 80 and a quarter. Next thing you know, a few minutes later, trading in the 70s. Rallies back up, 80 and a quarter. New lows, 73. Again, a little bit back up, 82 and a quarter. Again, so it's only got 2 points against you here. All right, and it's just going back and forth, new lows, new lows. Now, again, I'm not going to predict that it's going to go all the way down to, got all the way down to, here's the chart, into the 40s here. But, realistically, you could have got something decent out of the move from 80, at least 10 points, down into the 70. And what was your risk, right? The worst case it ever went against you was 2 points, all right? Almost immediately, you could have got down to, 74 and a quarter. So you could have easily gotten 5 points out of this. So, I'm not saying that, you would have sold it here at 80 and a quarter and cover it. Oh, yeah, you cover it way down here at, in the 50s or even down into the 40s later. That's a bit cheeky to sort of claim that. Some people will, but me, it's just about reading the order flow and going with the market. I like to be in and out. I don't necessarily like to hold the trade for longer. Sometimes I wish I could hold the trades longer, but that's just not how I'm wired. So anyway, guys, flow-driven markets, understanding them, and more importantly, when everything is telling you it's bullish, but the market is selling off, pay attention to that. Don't try to fight it. Don't be sitting here saying, oh, all the information that came out is bullish. I got to buy it. Buy some more. Buy some more. Just like you see these guys with crypto, right? With Bitcoin. I mean, now we're starting to rally. I mean, who knows? Maybe it's a legitimate rally. Maybe it's a pump, and rug's going to get pulled out sooner or later. But you see, if you read up until about last year, everything you'd ever see about crypto on Twitter, on Facebook, it'd all be bullish. Nobody was ever bearish, and it's hard to remain bullish when the market keeps dropping, right? We're trading 60,000 and then 50,000 and 40,000. At some point, you got to say, you know what? Maybe I should think about this differently, right? Market is going down despite all the bullish information. Maybe I should be looking at signs to be getting short, right? And today, the clearest sign was the divergences that failed. So anyway, guys, I hope you enjoyed this video, and I'll see you guys on the next one. Bye-bye.